Yo, yo.
Hey, what's up, man?
Chilling, dude.
Oh, one second. There we go.
No.
All right, how's that?
Better.
Sorry. Oh, what's up, guys?
Chilling, man.
We're
Yeah,
back.
we're back. It's been a minute. When was the last time we did a Spaces?
I haven't done
You-
one in a couple months, I feel like. Since Chad kind of just stopped doing them, then I don't really have anyone to do them with. And plus it's kind of just been like quiet on the feature end, and JP kind of really stepped up, started doing all of his own, so I just kind of
Yeah.
let him have his space and do all that and support him from the background. But we haven't really hosted any in a while because it's just kind of been just heads down doing other stuff.
Shipping, man. Shipping. Cool. Well, all right. Let's kick it off. Today we launched the trade accounts feature, which was a couple months in the making. It got delayed due to some auditing and security issues, a vulnerability disclosure report. But that was good because we basically got a lot of the Immunify white hats. Once the code got merged to production, it was actually officially eligible for the bounty program. So even though the feature was turned off in mainnet, because the code was basically merged, it was eligible. So we ended up paying out a bounty on the trade accounts feature. Went back, re-audited it again, fixed that bug, and basically have just been waiting for a good window to turn it on. And so that morning that the window came, the feature was flagged on, and yeah, we've already started to see a bit of an uptake on its usage. I saw the dashboard that you made for that cow. That was really cool. Um, I see there's about, let's see, 42,000 USDC in trading accounts. There's 2,300 in USDC on AVAX. So I think that'll be those lesser used chains that are a bit harder or to keep ARB. They're probably going to be a lot of usage on there. Let's see, almost 1 Bitcoin in the trade asset depth so far. So yeah, looking like a pretty good uptick here. We'll see. We'll be tracking it over the next couple of days and weeks as to the adoption of the feature, so that we can begin to phase out synthetics. So yeah, I guess we can talk about how does ARB work on THORChain before today, and then how does it work after today. So prior to today, ARBs on THORChain were using synthetic assets to ARB the network, because when you make swaps using L1s like Bitcoin, say for example, if you're going to try to if there's a large like ETH to BTC trade on THORChain, now the pool is probably has more BTC in it than there is ETH. Or sorry, if you're going to do a if you're going to do an ETH to BTC trade, there's more ETH in the network than there is BTC. That will not more. It's just that the price is higher now on THORChain than it is on any of the other centralized exchanges, and so that necessitates an arbitrage action, which is basically corrects the pool price by taking liquidity off the centralized exchange and then making the opposite swap to counteract the price movement created by the swap that was just made. So prior to even say synthetics, for example, you would just have to ARB using L1s, which meant that you had to deal with like the say 10-minute block time for Bitcoin. So if you saw the pool move now, maybe like 3 or 4 people would submit a transaction to make the trade in the opposite direction, but maybe only one of those would, basically, if unless they all confirmed in the same block, you're kind of competing for, who's confirms first in which block. And then it just makes arbitrage really inefficient to do things that way. Arbitrage has to be fast, in order for people to, place the most number of trades that keep the pools arbed, as efficiently as possible. So that's why we introduced the synthetics feature, which was one of the earliest features of THORChain, obviously having anticipated the need for faster ARB, for ARB with faster finality and faster confirmation time. So synthetics are basically an asset that leverages the dual LPs to create a synthetic representation of the asset, on THORChain's network. It's a native asset that can be held in a Thor account. And so what ARBs would do is they would swap L1s to the synthetic asset, which incurs slippage, on both sides, whether you're depositing L1s and getting synths back, or you're, burning or redeeming synths and getting L1s back. You're going to have to pay both slippage on the pool and, in the outbound case, the outbound fee as well. So that makes, synthetics, that while they're better for the network in the sense that, they help the network arbitrage faster. They're better for users, who can get tighter pricing on pools. It's worse for the dual LPs because they're basically having to take on the leverage exposure from people who want to hold synthetic assets, which is not ideal for dual LPs, which I think for a lot of reasons, we want to reduce demand centers for leverage on dual LPs so that dual LPs can continue to have profit, and that those doesn't all go to, the basically all the upside goes to synth holders. And then, it also is not good, for the ARBs because they need to pay for the slippage, when they enter or exit. Um, Basically, pay, if you wanted to hold 2 Bitcoin, worth of synthetics, you would need to like pay for the swap fees as if you were swapping 2 Bitcoin to a different asset, through the Rune pool. And that is why, I mean, that basically just like means ARBs are going to make less profit, which means they're going to ARB less often, or they'll only take larger opportunities, which will result to, larger spreads on prices. So you basically want the fees to be as low as possible for ARBs basically all like while still maintaining the ability to fund the liquidity pools as well, because the real yield on THORChain comes from people who are doing like organic swaps, as in like they're bringing like a net, they're creating price discovery. That's what generates the most yield for the protocol, but arbitrage is always going to generate slightly less. Um, so so yeah, basically the trade assets, completely eliminate the need to, pay slippage when adding to a trade account, or adding or removing from a trade account. Once you have a trade asset, those are basically like, meant to deposit and withdraw one-to-one redeemable with the L1. And then once you have a trade asset, you're just paying for the slip on the swap between trade assets. So that makes arbitrage a lot more efficient, which should lead to more volume on THORChain. But that's not the main benefit of trade account to the network. That is just like one of the. That's just like the primitive itself enables other things on THORChain, but the primary motivation, for the trade accounts feature was to remove demand centers for synthetic assets. So, basically bringing down synth exposure for dual LPs and giving ARBs a more efficient way to arbitrage, which again, results in better pricing. So
Yeah,
I think,
synths are kind of interesting, like the way that they were designed originally, because originally it was designed so that synths are liquidity on the network. So it's both Rune and the asset. So it's 50% of Rune, 50% Bitcoin, which is interesting because it creates more depth to the network. It makes ARBs essentially LPs, but then it also leverages dual LPs, which is obviously like the bad side of things. So going forward, synthetic assets are going to be kind of cornered more towards just savers, and that's going to be the primary, and it's going to be really the only demand center for synthetic assets is just adding to the LP depth through the synthetics. and trade assets are just held. They're held in the same vaults, but they're just accounted for outside the vaults. So like it's basically whenever you make a trade account trade is just an accounting change. Like all it is just just moving around numbers in THORChain's spreadsheet of who owns what assets. And so there's no outbounds that are actually created when you know trade assets like one to another. It's pretty interesting, like just the difference between the two, and especially just like moving away from ARBs being LPs in the network, but their assets are still secured by the network now. So I think it's way more similar to like how centralized exchange does it, where it's like you don't pay to enter a centralized exchange other than to deposit assets on. You know, you just pay gas fees and then you just have a deposit, and then you can just do whatever kind of trading you want, and then eventually you can withdraw. So this kind of gives that same experience where it's just there are just assets, they're native assets that are held by the network. You get a representation of that to trade on the network, and then whenever you're done, you can just withdraw for just gas fees. It just removes all the slippage because there's no actual swap that goes on. Because with synthetics, because you're getting that dual asset exposure kind of in the back end, there needs to be a swap that happens. So with trade assets, it's just a deposit, and then it just mints a one-to-one representation of that, and you can just swap however much you want. So I mean, I think it's going to be really good for ARBs, high frequency traders. Um, I could definitely see, you know, people creating really cool apps around just trade assets, because it's pretty powerful for people just being able to swap with just your Thor address. Like that's all you need to actually do any of this stuff is just like you have your Thor address, and you can then you can trade Bitcoin, you can trade Ether, and then whenever you're done, you can go back to stables, go back to Bitcoin, whatever you want. So
Yeah. Yeah, so that's good. That's a good intro to trade accounts. I feel like just starting off with the motivation and the design of the feature. We can talk a little bit about the launch. I mean, yeah, it's basically just like a feature flag. So this was one that doesn't touch a lot in terms of vault and security logic, but there was just a lot of possible code paths like that needed to be tested. So it did take a little longer to get this into production than I would have hoped, but alas, like it looks like we've launched safely. So basically, from this point forward, we're just going to continue to monitor the uptick in the adoption of the feature, and eventually, we're going to start to phase out or apply an incremental increase in the fees that are assessed on synth swaps, so that we can basically start. If we don't see ARBs, naturally migrating to this better and more efficient way of doing things, then we'll basically kind of force their hand by incrementally increasing the amount of fees that swaps will have through synthetics will have to pay. This won't affect anyone who's like currently using THORChain to swap through any kind of wallet or anything like that. This is again purely just for like the arbitrage function of THORChain, but it does help those types of swappers to get the best possible prices when swapping.
I think it's kind of a no-brainer for ARBs to switch over to, especially no fees to enter or to exit without slippage. So like, I mean, the good thing is that there is streaming entering and exiting synthetics. So like in recent past, that's been brought down to just 5 basis points coming in and out, which has made things a lot more efficient. But it's still, you know, if you're going in and out of native, that's still 10 basis points, 5 on the way in, 5 on the way out every single time. And then you're paying the gas fees on top, and then for every swap, when you're swapping synthetic assets, you're also paying, you know, THORChain outbound fees. So that's like, you know, $1 you're losing every trade or something like that. So it's really going to add up for the big traders to, stay on synthetics. And people, I think they're definitely going to want to move over to trade accounts. It's going to be a lot more efficient for everybody.
Yeah. Yeah. So basically, it's gonna be better, but in the like you don't always have like if someone just is running an R bot and they're making a lot of money from it, they might not like actually feel motivated to do anything or change the code that's already running until it stops working or until they stop making money. So like you never want to like bank on user behavior being exactly what you think is the best thing. You have to account for every possible scenario. And so we do have a plan in case people like drag their feet on adopting it. But hopefully we just see synth swap utilization slow down to a crawl, and then we can kind of start to phase it out so that that synths aren't holdable. And they'll basically just be like there might be some sort of period to deprecate them after that point as well. So yeah, we really only want to be using synthetics as the basically as like the backing mechanism for the savers. And we'll talk a little bit about how savers scales and how we continue to further deleverage dual LPs, and that'll be part of the broader discussion about the roadmap. But yeah, we can maybe take some questions. Chris, I see you're speaking. Was there anything we missed on the overall design of trade accounts or the benefits there are to users, swappers, or ARBs? If if not, we can just move on to the rest of the roadmap.
I think you covered it pretty well. Assuming you can hear me. I do have some questions though.
Sure.
If you have some time. Well, first, I do have a video on it. If anyone hasn't checked it out, like a week or so ago, to explain it in a bit more detail, which pretty much covers it, everything except for the increasing the fee part. But I'll talk through that. So, first of all, the reduced leverage on LPs. I talked about that. I talked about that with some other people. I think whilst that would remove, like the ARBs for using synthetics would go, and would make space and reduce the leverage on the LPs, that would likely be taken up by more savers demand. Is that something that you would think? Like if you take out the synthetic BTC people for ARBs, it's probably just going to make more space for savers, and then that's just going to get taken up. What are your thoughts on that?
Yeah, for sure. So yeah, I mean, yeah, it definitely like but yeah, you can really, if you move demand. I mean, right now we're not even at the cap for savers for BTC, for example. So we're not at the cap for savers for BTC, ETH, USDT, USDC, any of them right now. So savers is not really like the like primary. I mean, it is the primary driver of synth utilization, but like reducing synth utilization by stopping ARB is theoretically not going to create any more demand for savers than there is today, demonstrated by the fact that none of them are at the capacity. So I think it will. I think turning off savers will, in the short term, decrease overall synth utilization, and we will see. Yeah, we will see it now. Whether there is a increase in the overall demand for savers in like the medium to longer term. I'm not, I'm not sure, but the catalyst for that would certainly have to be like seeing more volume through the platform, because the APR for Bitcoin savers right now is hovering about at like 0.58%, which I don't think, like, for me wouldn't be enough to like take the counterparty
No,
risk.
it's because we're almost at the cap right now for Bitcoin, and for quite a few assets, actually, we're pretty close to the cap. So, like, as we get closer to the cap, the yield scales down. So that's kind of why the BTC APR is so low. So, especially getting the Savers APR, the synth utilization down by stopping synth mints and just having that be Savers, it should balance things out a little bit more. But we're pretty close to the cap on a couple assets, including Bitcoin.
Yeah,
I think 81% there for BTC.
Yeah. I mean, again, I think the only thing that's really going to create more demand for synths and savers after like synth swapping is decommissioned is more volume through the pools, which will result in more organic fees, which will attract more savers. So yeah. What else?
There's a question in the comments. So someone's asking about trade assets being off chain. So all trade assets, it's completely on chain. So it's all just assets that are just held in THORChain's vaults, but outside of the pools. So you can think of like the TSS vault is what's holding all of THORChain's Bitcoin, and THORChain up until now, all of the assets in that vault are all in the pool. But you can think of it now, it's kind of like most of it is in the pool, and then some of it is outside of the pool. So it's just like an accounting. Basically, trade assets are just like an accounting change, right? It's like we have assets that are in the pool, and then now we have assets that are outside the pool, but they're all still in the vault. So it's all secured by THORChain, but it's not in the pool. It's just a asset that's held off to the side that's always one-to-one with people's trade asset balance. So you hold one trade asset, and there's one trade Bitcoin. There's one real Bitcoin in the vault held outside the pool. That's yours basically. So that's kind of how it works. All on chain, transparent. It essentially just brings the centralized exchange like experience to like a very auditable format where you can just see where all the stuff is, what's in the pools, what's outside the pools, what your share is.
Yeah.
I've got another one. I had a question based off my video. So do you see a reduction in swap fee income for liquidity providers? This person was concerned that because of the synth swapping for the in and out would be removed to the conversion, that they are concerned that there will be a reduced income to liquidity providers because of that. And I said, well, perhaps you could have that would be true, because obviously you wouldn't be swapping in and out, but there could be potentially increased swap volume due to just this more swaps on trade accounts. What's your thoughts there from a liquidity provider point of view with regards to their swap income change?
Orion actually pulled some of this data, and he's here. Maybe he wants to share what he said, but I think the data that he shared with me is actually pretty minimal in terms of the amount of fees that are collected as a percent of just like synth mints and synth burns. So, but he actually looked at this exact question because I was wondering the same thing.
Yeah, I see Orion in my response too.
Yeah, I think if anything, there's going to be more fees paid because there's going to be more and larger swaps happening. So like, whereas most people, so like the amount of money that you can make on a trade is it's always going to be it's always going to be like capped by the the amount of slippage that you have to take. Wait, no, sorry. Whenever like there's like big swaps going through THORChain, you end up seeing the arbs kind of struggling to catch up. So, and they're just like placing like 5 BTC, or 10 BTC, like streaming swap ins to synthetic assets. And when the network is kind of like in that state where it doesn't have enough, when like the arbs aren't holding enough balance of native assets in order to arb the pools, you're basically like the pools are they're basically mismatched to the rest of the world during that time. And so like for any amount of time that like there's a sort of an inefficient price execution on THORChain, we're probably missing out on swaps, meaning like aggregators will quote other places that have more liquidity. It's literally just about moving liquidity between exchanges and decentralized exchanges and how long that takes. And whichever network can do that like the fastest is going to have the best price execution. And then we'll basically have, and for longer too, for larger amounts of periods of time. It's not just like a constant thing whether an exchange is beating a DEX is beating another DEX on price execution. It's like sometimes some DEXs can be beating others, and that's just because of their ability to like rebalance liquidity faster. And so I think like what this will show is that we'll basically have the best arbitrage. Like our goal is to make arbitrage the best so that we're always giving the best price on any swap. And that's already the case, but like making sure that we always have the best price execution. I mentioned this when we talked about the 4 pillars of what we were focusing on for the next like 6 months. Basically, what were they? One of them was price execution, though. And if we can just have the best price execution, we can get the most volume and be the number one. The number one venue for decentralized cross-chain trading in the world. Like that's always the goal, and making that happen is the first and only goal worth working towards. So like in pursuit of that goal, having the best pricing is always more optimal, regardless of whether like LPs make a little bit less or this, ARBs have to pay a little bit more fees or whatever. Like as long as it's you're getting the best price on THORChain, like that is going to lead to the most overall increase in income for those LPs and the number of swaps that will be happening.
That aggregator, that's a good point. That's a really good point. I didn't think about that. Is there like a dashboard metric that would record the pool price deviation to as you said, the real world, so you can understand how much more efficient trade accounts is going to be than what's been there what we had previously?
Yeah, that's a good question. I know we have the price versus centralized exchange delta for the Tor assets for the lending dashboard. I think it'd be pretty easy to stand that up against the pool prices. I think we could get that.
That'd be cool.
Well, it's really nuanced. It's the question of like liquidity, volume, like it's really nuanced. It's really hard to predict why, or to basically determine why any one DEX or SEX is seeing differing volumes relative to another one. But at the end of the day, it's going to play out to liquidity, arbitrage, and integrations, and just like where you're plugged in. And we already have an early mover advantage on integrations. So that's why like JP and myself are trying to solve the the other side of the equation, the liquidity side with Rune Pool and scaling Rune Pool, scaling the Savers program, getting more TVL. Like now that we have an early mover advantage on chain integrations, the next big area that we'll have to compete on is in liquidity. But if we can, balance those two sides of the equation, then I have no doubt that like the LP incomes will be the best in the industry on THORChain.
Yeah, once that aggregator like really matures, you're right. They're just going to go out. Where can I get the best price?
Exactly. Exactly.
So,
right now, like you kind of do have these like different DEXs, different wallets are plugged into different DEXs, but they'll soon all sort of, plug in whatever aggregator brings in the most cross-chain liquidity. That's probably going to be DecaSwap, which is what JP is building right now. And it's still crazy to me to like say his name because I couldn't say his name for so long. It's super weird. But yeah, what DecaSwap is going to be with what JP is building is going to be like the aggregator to aggregate all of the DEXs. So like 99% of the time right now, or even right now, if DecaSwap exists, THORChain would still be the best price 99% of the time. But like THORChain's own liquidity supply can become exhausted, right? Like there's only so many L1s and so many trade, and held in pools and in trade accounts at any given time, that like if you start, someone wants to start like making swaps with size through any decentralized exchange, THORChain will eventually get exhausted of its BTC or of its ETH. And so you rely on ARBs to move that back into the system by trading the asset that's been moved, that they're already holding on the balance on their exchange. They have that in excess on the exchange. So it's basically like whichever DEX has the biggest pools and the most efficient ARB will win at the end of the day, because these mega aggregators will take over and basically push the liquidity to the venues that have it. So it'll basically go down the list. Like the premier DEX, which is THORChain, will service 97% of the swap size that the user is trying to ask, and then 3% from whatever Chainflip or Maya, and it'll break out trades and place them across multiple DEXs, and then in the next trade, THORChain will only provide 96% of the swap size, and then 4% will go to the other ones, because there will be like a decrease in each swap. Each streaming swap, every sub swap is moving liquidity from one side of the pool to the other, thus taking it out of balance, thus requiring arbitrage to be brought back in. And so, you have to, yeah, that's why like keeping the pools as tightly priced as possible. That's like one of the number one goals, and then just scaling the amount of, and the amount on each side of those depths. Those depths makes the price impact smaller per trade. But the problem with streaming swaps is that they are so efficient and they're so good that like there is diminishing returns to liquidity pool size on THORChain. Like JP says we should have, with the road to 100 billion. It's like because we have streaming swaps, we have trade accounts, we have such efficient arbitrage on THORChain. There needs to be like billions upon billions of dollars per day going through THORChain in order for like the pool size to get anywhere close to 100 billion, just because it is so capital efficient. So we kind of like we had more rise in TVL faster before streaming swaps. So while streaming swaps has been great on like the narrative of like all the volume that it's brought to THORChain, it has stifled TVL growth, in my opinion. There would be more APR and therefore more TVL if we did not have streaming swaps, but there would be less swap volume. So I don't know. I think it's still like a bit of a wash. I think you can't really say which would have been a better outcome for THORChain. But all I know is that the streaming swaps that we do provide today are excellent for users, and that pricing has gotten us to the top of the aggregators 98% of the time, and we've landed huge customers that use it. So like I think the net is overall benefit, but you have to recognize that every single little mechanic including trade accounts in THORChain does change the the competitiveness, the metrics. Like everything is super intermingled with THORChain.
Do you see the concept, or which I would say, of rapid swaps making ARBs more efficient? Well, like once order books are in, so you're lining order books up against existing swaps.
Yeah, absolutely. I think order books are going to make ARB even more efficient and make pricing even better. It's yet another tool that while like you can debate whether people are going to, and I mean I'll debate. I mean I'm not sure that like how fast we would receive an uptake from our integration partners, the ones that actually funnel the volume through THORChain. I don't know how quick they would be to add an order book UI for consumers into like say into Trust Wallet. Like it's probably not going to happen. So who are we building order books for? In fact, we are also building order books for arbitrage bots, because arbitrage bots will now just mirror the order book excuse me, from Binance or whatever onto the order book into THORChain. And so they'll basically be able to take those ARB opportunities even faster. So literally when you go to make a swap, you're no longer like swapping through the pool and then relying on an ARB bot to like do a little trade so that when you do your next trade you get a little bit better of a price. Like streaming swaps are an elegant but still inadequate way of getting liquidity to the users as quickly as possible. It takes time, and that amount of time you're basically losing. You're always going to be losing edge over other swappers in the market who are able to get to the liquidity faster. So yeah, when we launch order books, which will be built on top of the trade account primitive, then there will be even better arbitrage. And that arbitrage will happen instantly. So instead of having to stream the trade across like 100 blocks or whatever, it'll just go down the order book, pull in all the liquidity that's already there at those different bids, and then put that into the output of the swap, and the user will be able to swap instantly rather than having to stream that over a longer period of time. I think once we launch order books, once we get all the ARBs using trade accounts, then we get all the ARBs using order books, we are going to have the best priced Bitcoin, and if Bitcoin, ETH, whatever, Bitcoin, USDC swaps on the planet. And then we're gonna, yeah, I think that's how we win. Like it's arbitrage is a super underrated aspect of THORChain, partially because we don't know any of those users, and it's really hard to do like user research and stuff, just like from a product perspective. But I think what we've landed on is a design that will give, and it's not just a design, but it's like the entire system, like swaps through third-party integrators, like that just want like a really easy like X for Y asset, simple swap quote. And then in the background, we've got all this crazy shit going on that gets the liquidity from, it fans out. All the ARBs are basically fanning out on those users' behalf, filling orders within seconds, and everyone gets the best price. And we, continue to grow THORChain. That's kind of the vision. So, like most people on this call will probably never place an order on an order book on THORChain. They'll probably never do a trade account swap, but they will be the beneficiaries of even better price streaming swaps and eventually even faster executing swaps, with or without streaming, because of all of these innovations that we're talking about right now.
That's pretty cool. I've got order books is going to be on my next video, so I'll give you a look and make sure they've got everything on it. I'm pretty cross it. And then when you line up order books with streaming swaps, the way it iterates through the queue is pretty cool.
Yeah, it's gonna be awesome.
I did have a question. So for going back to synths, was there going to be? You said we're going to increment the swap fee for when you mint synths. Because I know, people. I hold synths because obviously the on-chain cost is much cheaper. Other people that hold synthetics just for asset exposure as opposed to trading L1s. Is there going to be a point where the mint is turned off so you can no longer mint? Like, can you just expand more on the plan to, the deprecation of synths for people that hold it? So not for savers, but, holding synths in their wallet to try and incentivize people to move out? Or is there a plan to stop that synth minting completely for individuals?
So luckily, we're not in a hurry here to like deprecate synths by any means. It's more just like that this is part of the plan that makes THORChain better. So the faster we can do it, the better, right? It's like we're not in a hurry, but it's just like, let's get it done so we can, move the roadmap forward. So yeah, I want to keep it like relatively aggressive on the rollout. So maybe in 2 weeks we'll look at like how much trade flow is going through trade accounts. And then if it doesn't, if it's not where we'd like it, then we can petition the node operators to apply an additional 5 basis points fees, which will go to dual LPs, and just keep ramping that up 5, 10, whatever, until they just can't take it anymore. And they just are kind of forced to move to trade accounts because it's, the ARBs that are using trade accounts are now eating up all their opportunities and all their revenue. So we should see it happen relatively quickly, just by virtue of like market forces and economics. But if we don't, we'll just apply like a linear increase to the synth swap fee, and then eventually we will disable new synth mints, and then we'll have a sort of decommissioning period. So anyone who holds synths will be told to basically give them, I don't know, 2-3 months to basically burn their synths back to L1, and then they can do whatever they want with them from there. They can deposit them back to trade accounts or go on their merry way. But at some point we need the ability to stop the minting and holding of synths in third-party accounts. And that obviously like can take a lot longer because there's no reason that like we care if people have synths that they can't like do anything useful with and they're just holding them. But we eventually need to like shed that liability altogether and shut down that code path. So we'll do like a similar thing that we did to like the kill switch with native rune, and just give people an amount of time to redeem their remaining synths, and then after that both mint and burn would be disabled. But I hope it doesn't come to that, and because we really don't like forcing the exit shut on certain features, but at the same time, like, we are sunsetting this use case and this mechanic, and it is no longer supported or needed by the network. So why should the network, its operators, its its stakeholders have to, its developers have to. What is going on? Was there just a weird sound effect?
Yeah, native rune THORChain. Just wait a second.
Yeah. Yeah. So anyway, that at some point there would be like a like a just like turning it off. But I hope we don't really like even need to ever cross that path, because no one really has any reason to hold them. So like they can hold them if they want. If it's like a negligible amount of people holding them, then we can just like keep that open, that bridge open forever.
Cool. Thanks for asking my questions. I'll let other people talk.
Cool, for sure. I just want to go through like the remaining. I mean, I already kind of touched on them, so I want to go through the remaining roadmap items. So yeah, right now, as of the launch of trade accounts, and now that trade accounts is live, we have the primitive and the ability to do order books. So one of the reasons that like I was especially hesitant to ship order books, even though the code was complete, even though the PR was opened, even though it got merged, we haven't even turned order books on, and that's because it was using these synthetic assets. And in all of the sort of user research that we did do with potential users of order books, they were like, no, I'm not going to have a product that is called an order book, but that requires you to pay a fee every time you want to deposit money into it. That just sounds crazy. And I agreed. So that's why we basically held off so far on enabling order books as is. But now that we have the trade accounts primitive, it's a much better way to implement order books in it will give a much more sex-like experience. And so now that we have that primitive with trade accounts, I'll basically change the order book implementation to use trade accounts, and then we can launch order books hopefully relatively soon. I'm not really sure like where that lies like on my priority list between there and like Rune Pool, for example. So maybe, I don't know, maybe people can tweet at me and tell me what they think is more important. If they want me to work on Rune Pool or on order books, I'll leave it up to the community. But yeah, I think we've talked a lot about Rune Pool. There's been a lot of spaces on it. So I don't want to take up too much time today talking about Rune Pool, but everyone should know that I've started work on that, and there's a branch open for it, and we're starting to develop out the Rune Pool. So the design has been finalized. There's an issue in GitLab for it, and I am now implementing it. So that's pretty exciting. I'm not going to give any ETAs, but yeah, I think Rune Pool is like my immediate priority. But if people think trade accounts would be more important, or sorry, order books, go ahead and tweet at me. But I'm pretty sure the community wants Rune Pool more, so I'm just going to keep working on that.
Where's order books at? Like, how much effort would it be to get across? Obviously, once you give trade accounts, a few weeks just to make sure there are no issues. Like, how long would that take for order books to get in?
It should be relatively easy, but the last time I reviewed that code was probably over a year ago. So I would need to go back in and review all the order books code, and pretty much everyone who is going to, give us, a thumbs up on signing off on enabling the feature is going to have to like go back through, read all the code, refresh their understanding of it, and then figure out whether our implementation using trade accounts is good enough, or not good enough, but just figure out if it works properly theoretically, and from a security standpoint it all makes sense, and then we would give the sign off and then launch it. But it's just like context switching. I think there's a lot of momentum behind Rune Pool right now, and it is a relatively standalone feature and does not need, it's actually not going to be a ton of work. So I hope to ship Rune Pool fast and soon, and then just like turn full attention on order books after that. I think that's what makes the most sense.
Yeah, I think that makes the most sense too, especially just like baking Thor's trade assets for a little bit. and just like making sure the transition there is all good and just giving that a little bit of time to harden a bit. And then we go to order books. And order books, like exactly what you said before, order books are going to be just like really powering up trade assets. First off, just really cool is just like how it works. Like basically you can just do any swap, like, ETH to Bitcoin. And then whenever that price limit is hit, your swap just goes through. So like in the meantime, your asset is stored as a trade asset. So that means that there's no slippage entering in order book position. So like that's a really cool like user thing, which front ends like might implement. Like I'm sure like THORSwap or Shapeshift would do something like that to implement it. But yeah, dude, ARBs using order books is going to be crazy because that's just basically aggregating every single centralized exchange order book into THORChain's order book. So it basically makes THORChain the just the order book aggregator of every single other order book, just bring in all liquidity. And like that's really where the big unlock is just really concentrating liquidity at any given price. So yeah, really looking forward to that big unlock of just getting order books out and getting ARBs on order book, especially. And then yeah, you could just fill a huge streaming swap just based on orders in the order book, and you can get the best of both worlds, like not having to wait for the streaming swap, but still getting best in class price execution across the board because it just fills in orders using all the centralized exchange order books. Like you can imagine wherever an ARB can make a profit, they can just place an order for that and then just update it every single block. So if you're an ARB on THORChain, you're just scanning where can I make a profit and at what price point for any given asset, and then whenever that price is hit, you just do the ARB essentially. So you could have all kinds of actors stepping in there and just providing liquidity at any price and just being super, super deep.
Yeah, and this benefits every user of THORChain, every stakeholder, every integrator, every swapper. So yeah, there's a lot to look forward to right now. I really like the direction, and like to me, once we have like Rune Pool to solve to solve like Rune TVL, savings to solve non-Rune TVL, order books, trade accounts, and instant swaps to like pretty much like solve the like arbitrage, like speed to liquidity side of the equation. I would consider that like the full suite of features. Everything else is like just like chain integrations from there. So yeah, I think we'll continue to work on chain integrations too. I don't have much of an update on the EDDSA side or Solana. I think everything that we've talked about thus far is a bit higher, risk reward than the Solana stuff. But I am definitely hoping to be spending more cycles on Solana sometime soon. Potentially, we could start churning the StageNet TSS vaults with EDDSA pretty soon, but there's still going to be a lot of dev on just like the Solana chain client and stuff. So no ETA for that stuff, but yeah, bandwidth, need it.
What about the EVM L2s?
That's also like, I mean, any chain integration, even if you are like just saying, okay, we don't need to like run the infrastructure internally and we can just use sort of like centralized node providers, you still need to like test the chain client, and not all L2s behave the same. Some have lockups and expiries, and Bifrost needs to know how to do all that stuff. So I'm a little bit less bullish than JP on the L2 strategy, but yeah, I mean, like it's just, again, you need people people to look at it. I don't think anyone realizes, but it's really just like myself and Ursa and THORSat, and the two THORSat guys that do protocol development at the moment. So I think it's one thing to talk about the roadmap, but in order to actually like get it done, we just need more bandwidth we don't have right now.
And huge props to you guys being the people that carry all this stuff across the line. Finally, trade assets. I mean, just there's so many roadmap items that you guys just churn through, and then just again that's solving all the other like little problems that come along the way, like little bugs that just take up a lot of time. Like there's really a lot that goes into the like the back end of all this, which is very highly appreciated by everyone in the community.
Yeah, there is a new. There was something new that we did in 133, which was to lock all the Treasury LP into a new into like a new module, and there's talk of eventually like using that for like a dev fund governance. So like individuals, external teams can apply to basically own. I'm guessing that the idea is that like individual teams could apply to own a percentage of the Treasury LP in return for doing development. So yeah, I think this year we also need to like now is the time to step on the gas and ramp up pace of effort on development and on growing the ecosystem.
Night everyone, THORChain, do you have a question?
Hi, thanks for the time. Just a few little points. So we always talk about community. So the community is all here. It's us. It's the people that have bought Rune and have held it, and contributed to LPs in the past and went through the the years with you. When it comes to the price of Rune, and you always talk about, oh, it's not that important, but it is. It's the most important thing for the community. Otherwise, we just move on to another token. Everything in crypto, and this is from a wise person in crypto, said it's all about hype. You just keep hyping and you never deliver, and that's much better than actually delivering anything, because the hype keeps continuing. Once you deliver, it drops. So if you look at the price of Rune, nothing's moving. Like there's some systemic failure of whatever things you are introducing. It is not reflecting on the price. And I don't mean by trying to attract new people to buy, but something has to feed into the cycle that by introducing all these, buy extra volume, buy extra things, it has to impact the price. Look at BNB. It's just now reached its all-time high despite CK, whatever the fuck his name is in jail. Like there's something odd in Rune unable to move its price. I don't know what you need to do, but you need to think of a system that moves it, not just because we all want to just go and sell at 100 Rune. It's it needs a vicious cycle to reabsorb Rune, make something that can only be paid by Rune so that somebody has to buy it. And that's where I think you're failing. You can, a lot of, I think 90% who are sat here in this chat group have no clue what aggregators are and order books are, or even really use any dexes, but they are part of the community who have bought Rune, hoping to make profit in the future. So it's kind of these people you need to address as well, not just some random bot or order books or traders that seem to not be contributing anything. And the only people who are profiting here are the node holders, the ones who've got the 1 million runes and keep selling. As soon as they get their churn money, they sell, and the price is static. And all the others were like, so why am I even here in this community? Thank you.
Yeah, I didn't hear a question there, so I'm just gonna thank you for the feedback. But yeah, there's no answer to that because there's no question. The question is like, what are you doing about price? I think we can just keep shipping the roadmap, and if you have suggestions to change the roadmap, then we're happy to take those into account. But yeah, I definitely agree with you. Like that the price is down. We can all see the number. The price is down. I agree there. But I didn't hear any sort of real feedback as to why or what we can actually change.
Hey guys, it's JP in here. I'm just quickly jumping in. I've got to hop in 5 minutes. It's 5:30 a.m. here in Singapore. So there's a question on price. So fundamentally, THORChain requires metrics, adoption, and momentum, right? So we're building $100 billion DEX ecosystem. This is not like an overnight thing. This is a 5-year thing here, and we're looking out to the 2029 cycle. That we need the features, we need the adoption strategy trajectory, and we need the integration partners to pull that off. One thing opportunity I've seen right now is this massive bifurcation of interfaces and aggregators, and there's a lot of non-cross chain aligned liquidity that just does not have exposure to cross chain liquidity. So the opportunity that I'm trying to strike on right now is bringing liquidity, attention, memes, and money back into cross chain land. So that's currently my efforts with what you see raging around on Twitter. So if we can do that, if we can bring everyone's mental capacity and money back to the cross-chain land, then we can build a large convincing DEX ecosystem. So everything's on track, but people have to realize that this is not like a 1 month or 1 year thing. This is like a multi-cycle project, and it has been multi-cycle and will continue to be so. So everyone needs to think out to the 2029 and beyond. What do we need to do now in order to have the features, the rollout, the users and integrations to build this, to basically split up like a giant decentralized exchange and kind of disrupt it. So that's where we're at right now.
Yeah, and I covered earlier on in the call about how DecaSwap plays into that vision and how all the things that we're doing lead to that vision. So, it's thanks for
Yeah,
jumping
correct.
in
So
though.
DecaSwap is just a giant M&A project. It's a giant roll-up. What happens if we, all these small projects, they have a small treasury, a small team, they all compete on the brand, they all compete on the KOL access, they all compete. Uniswap is an example of a giant brand and asset that has domain authority and user authority. And so what if we just did a 10 to 15 project roll-up, gave them all a single brand to operate under, a single giant treasury, a single giant access to marketing, KOLs and whatnot, and it just consolidated everything. So that's the opportunity I see right now. So 100%, there's no secrets here. DecaSwap is a giant consolidation of the interface aggregator layer, which actually does not need to be decentralized. Anyone that's telling you that an interface needs to be decentralized doesn't understand how this works, because you have centralized distribution channels through app stores, websites, etc. You actually do not need to be decentralized at the interface layer. You can choose who to do business with. You can use channel analytics. So you charge fees from your users. You can choose who to do business with. There's no expectation for you to be decentralized. If you decentralize at the interface layer, you're just unnecessarily handcuffing yourself. However, the protocol itself must be credibly neutral. The protocol needs to be decentralized. The protocol that holds the liquidity, the coins, the assets, that needs to be a high churn, credibly neutral, high distribution protocol, and that's what THORChain is, Maya, Chainflip, etc. And so keep the interface level away from the protocol level. That's your separation of concerns. So DecaSwap is just a giant rollout project, and it's still a thought experiment, but I've got a lot of momentum behind me to pull it off. So look around to all your favorite interface aggregators and watch them over the next 6 to 12 months roll in together under a giant flagship project. I got to hop right now to a call with one such project who's thinking about joining the DecaSwap. The FTV is about 100 mil. I won't say any names, but there's about 10, 15 projects in my DMs already that want to merge. And this merge is just literally coming to an agreement about valuations and aspects, folding into one giant project and then continuing on. I'll jump. Catch me on the Twitter. Thanks, guys.
Yeah, so everything that JP just described there, it requires credibly decentralized liquidity platforms in order to facilitate. And so having the metrics and having the features that we've all just, finished up describing that, we hit on earlier, those are what's needed to kind of see through this vision of having all crypto swap flows and trading happen through decentralized liquidity platforms. And so all of that demand that is going to be created is going to flow through THORChain.
Also, like one thing you mentioned is, not really participating in DEX, and like that's literally what's being built here is a decentralized exchange. So, like the best thing you can do if you want to contribute to the value of of THORChain is to actually participate in it and do something. You know, provide liquidity. If you're already providing liquidity, that's great. I mean, you could take out a loan, you could enter savers, you could pool your Rune in Rune Pool and try and get more, and also bringing more people in to participate in these things. More people to make swaps, working to help get integrations from wallets, from aggregators, from centralized exchanges, from front ends, from people who are have a lot of capital that want to arb, from trading desks that can capitalize on that as well. Like there's a ton of ways to bring value to THORChain, which then brings value to Rune itself. So if you're really interested in that, like the best thing you can do is A, participate yourself, and then B, help others come in and participate and help build this into the biggest decentralized exchange ecosystem, and really use the products, because I mean the products are here so people can use them, and that's what generates all fees. That's what generates all demand for Rune, is swappers, people actually making trades, and people that are like really interacting on chain. So that's really what we need the most of, is bringing users to the swap products.
Hey guys,
Cool.
thanks a lot for putting all of this together. I really think like the value of an order book, it's like nowhere, like it's clear the value that brings an order book, and the arbitrage is basically going to realign the price and make sure that everyone can just actually trade efficiently. One question though is that, have you guys kind of planned to put in place some open source arbitrage bot where everyone could basically run, and that would increase efficiency and make sure just everyone can run an arbitrage that is being built by you? I think that would be something of value to the chain.
No, I don't think that there's any plan to do that right now. Like, arbitrage is a PvP activity, and so necessarily anybody who's more skilled at arbitrage than anyone else has they have their own financial incentive to like build and run that code privately. So like I don't think you're going to be able to hire anyone. Like, we wouldn't be able to hire a team to build an arbitrage bot that's better than that team could build on their own, because they're going to make more money by just running it privately, if that makes sense. I think arbitrage is one of those aspects where you can't do it publicly. There's no point. There's no reason. Thanks for the question, though. It is an interesting question, but you need to look at the game theory and the ROI of doing work publicly versus privately.
Yeah. Plus, if everyone's running the same code, then there's no real net benefit to everybody running the same bot. Because if everyone's just running the same thing, there's no real competitive edge. Someone that does come up with an edge is going to be making all the money, basically. And that's the whole PvP aspect that Pluto is talking about.
Yeah. Cool.
Altorian, what's up?
Hey, my question's for Pluto. I heard you speaking earlier that we don't have the bandwidth to move throughout the roadmap. Has anything changed with the team? And is there anything we could do to help?
No, I mean, nothing's really changed. Like, we've kind of been having, I mean, we've had a small team since the very beginning. I think THORChain is probably one of the smallest teams relative to the magnitude of what it shipped in all of crypto. We're not like venture backed, like there's not like there is a massive treasury, and I'm not 100% sure on the position around like hiring strategy with that. But I mean, I don't know. Like, I don't know what we need to do differently to attract talent. But people like devs have not organically found this project and reached out to us and been like, I want to work with you guys. I want to help. I want to do all this stuff. Like, it's really hard to find people who are qualified to build this protocol. And I don't know if that's a failing of like our own, like, if we need to like literally just go old fashioned and hire recruiters and have engineering managers and freaking, manage an engineering team that way. It's possible. It's possible that that's what's required to like actually like ramp up, development. But a lot of the pace of development was slowed during the bull market because there was a lot of throughput, and there was just a lot of like things happening, and We just had to basically recommit resources to keeping things running. So I think there's always going to be times like we basically built everything that, that that we like the foundation that we rely on today to process like billions of dollars a month in cross-chain volume, like that didn't exist before the bear market. And so that's kind of what we've been working on building. We also been working on building THORFi. We've been working on building savers, on streaming swaps. So there's been a lot that we have shipped. I don't think that we're necessarily shipping slowly. It's just that for the community, it never seems like enough. So while we hear those comments, sometimes you just have to like put it out of your mind and just know that like we are shipping these things as fast as humanly and safely possible. And if there was, if there were people lined up who wanted to help do that more quickly, I'd be happy to review their PRs and offer them money in exchange for them. But I don't see anyone like stepping forward who has the credentials to build EDDSA support on threshold signatures for cross-chain vaults. Like the people just don't exist. Where are they? Who else is building this stuff? Like there's no one. I mean, like literally, and I see resumes on a day-to-day basis for like full chain fucking full stack blockchain engineer. And it's like those people are not qualified to do cryptography and write protocol Golang and keep $500 million of exogenous assets safe on a day-to-day basis. So I don't know like if we need to how we need to change our strategy, but it's certainly something I'll be thinking about a lot more. But yeah, that's it. I mean, I don't know what else to say. It's a really hard space to work in, and let alone hire in. It's very niche stuff as well. So, I mean, yeah.
Thank you, Pluto.
Yeah. Yeah, I think this could like the new dev fund governance could play into this as well. Like, I've never really had an avenue by which to advocate or like try to hire people under me. So I could potentially put forth a protocol governance like measure to basically hire more people. That's it's a very self-driven team, self-directed team, so that's kind of hard when like you don't want like people who like plant their flag in the ground. There's like a name for that. I think it might actually be flag planters. Let me see if that's what it actually is. But it's like a name for like people in tech companies who literally just come in and like try to like take as much territory and control as possible while not like actually doing anything, i.e. like middle management type things. But like sometimes you need that in order to like actually manage an engineering team. So that's a challenge that I think maybe we are going through. And like if nodes were to unanimously say like, yeah, we want to take money out of the reserve and use it to, or take money out of the treasury LP and use that to fund more developers, then that is something that we would do. It's not a piece of feedback that I've gotten yet, and so we just don't really like we just kind of try to deal with things in the order that they come. And yeah, it's like that hasn't, hiring people is like it's a priority when, yeah, I mean, maybe we should make that a priority. I don't know, maybe it's worth talking about that at the next Discord stage, and kind of like polling node operators on what they think we should do. But yeah, I think we can ship all of the things that have been discussed today: order books, instant swaps, EDDSA, Solana. I think we can ship all of that this year. If that's too slow for everyone, then I don't know, do something else. It's super hard to also just throw money at a problem too. Like it's not like we're running a product shop or like something with like a sales function where you can just like increase your revenue by hiring more people. Like it really like especially because security is so important. Like just getting qualified people to like build this stuff and then and then ship it safely is super hard. But I think will be worth it. But like JP said, you have to look further into the future than just, oh, why is the price down in the last 2 weeks, or because we hear it every time. So I don't know. Next time we're just going to skip the question because you're literally just going to get the same answer every time.
For sure. I mean, zoom out, it's up many more, like multiple X's over the past year plus. I mean, look at any other time frame. I think everyone here that's building is here for the long term, and because we're here because we actually believe in what's being built and just building a better exchange. And that's what everyone's attracted to this project is here because of that, and they believe that this is really cool infrastructure, and everyone wants to be a part of it because of that. So I think people have, there are community contributors that contribute, but there isn't like, an insane number like Multipartite and, a couple others. But I mean, there's a couple other things that you didn't mention either. First off, right now there's an audit going on for the router V5, and pending the results of that, we're probably going to be removing the whitelist for the router, and that means that smart contracts will be able to call the router, which basically means you can swap from either a smart contract or like a smart contract wallet, like the new Coinbase wallet, for example. So that should open up like some new things for integrations and just like new dev capabilities where like you could basically just like build contracts that can do swaps on THORChain and make it a little more composable that way without having to be whitelisted, which is what currently happens right now. So that's like one thing that's currently in progress that we're shipping. Other thing being the hard fork, which is happening pretty soon, and basically it's like a lot of cleanup, but then it'll also enable Taproot, so you can swap from Taproot addresses on Bitcoin and to Taproot addresses, and just opening up more chain stuff, which we didn't have in the past.
For sure. Yeah, sweet. All right. Let's wrap it up here just because this is launch day for us. So like there is a lot of stuff just going on at the moment and trying to keep an eye on everything with the rollout of trade accounts. So yeah, maybe we shouldn't do the Twitter space on the day of launch next time. Create a little bit of unnecessary stress. But yeah, I think overall the rollout has been successful of trade accounts, and so we're going to continue to monitor the adoption there, fold that work over into order books, fold that work into instant swaps, continue working on EDDSA and adding more chains. The EVM L2 strategy will be shaping up too. Oh, and then most importantly, and not most importantly, but what's really next is going to be the rune pool. So I think we'll do probably like the next space. We'll talk about rune pool again, and just so now that we have a finalized design, so it'd be great if everyone who joined, thank you for joining, and yeah, catch us next time. We'll bring your questions about rune pool and give us give us your feedback on how you like the design, and you can familiar yourself. Maybe we should start a new channel for it in the Discord, and we can start taking questions there and talking more about that ahead of the next space. But yeah, thanks everyone for joining.
Yep, sounds good. I'll make a channel right now. See you guys later.
All right.
Peace.
Cheers.